Today, we're getting an update on the venture capital, startup and founder landscape in Africa. And to help us navigate this ever-dynamic space in our Lagos studio, I'm joined by a familiar and well-respected face in Africa's venture capital ecosystem, Iyinoluwa Aboyeji, OON, the founding partner of Future Africa, Africa's largest seed stage investor, which has invested millions of dollars into over 100 startups across Africa. Prior to that, he co-founded 2 of Africa's 7 unicorns, Andela and Flutterwave. His new initiative, Accelerate Africa, is a pre-seed seed stage accelerator program that runs multiple cohorts per year for up to 10 startups, taking in countries from across the continent. We're also joined virtually by another emerging giant of venture capital, Maria Rotilu. She's general partner at Open Seed VC, an operator turned investor and founder. She specializes in backing operators turned founders building tech startups as early as day zero. Before transitioning to investing, a better part of the first decade of her career was spent scaling multinational startups like Uber and Branch Co. in leadership roles. Great to have you both on the show with me today, Iyinoluwa and Maria. Maria, where are you? Are you on the continent somewhere?
London right now.
Oh, you're in London. Okay. Hopefully courting some institutional money, potentially. So I want to first of all start with Iyinoluwa. What is the funding landscape right now for venture capital in Africa?
The funding landscape is challenging. That is the reality. However, I do think of it as a period of great opportunity for those who are perceptive. Clearly, funding has definitely dropped. I think we're now at a third of what we raised at the heights of the market.
Okay.
And of course, with the many failures, investors are not exactly very eager to open up their wallets again. However, I think that on the flip side, you have a situation where pricing has now adjusted to keener realities.
By pricing, you mean valuation?
Valuations, yeah, right? Okay. And also, I think local investors who are on the ground here in Africa are getting at a better for it. And most importantly, I think the companies are now having an opportunity to tackle real problems,
right?
And solve real problems on the ground. And I think that actually now for us at Future Africa, now is the best time to be investing. It's familiar terrain for us.
Okay. So you make the point about funding drying up. And I wanted to ask Maria, from your vantage point, you've been an operator for many, many decades, many years. But the funding that has dried up, is it skewed to a particular region of the continent? Are we seeing trends across countries, across sectors? Can you help us make a bit of sense of the flows of investments?
Yeah, if we zoom out, we are coming from a 2020 zero era, zero interest policy rate. There was liquidity abound, especially in the equity space. Now, all of that capital needs to be mopped up somehow. The economy reacted with rising inflation, rising interest rates. Every single government started putting constricting monetary policies. And that obviously affected, Nigeria in the context of Africa, mostly because of our economy, dependencies on global investment into the continent. So I think broadly speaking, there is a contraction. And the contraction is due to the fact that now that debt is becoming a more lucrative investment to capital allocators, and equity has gotten a blow off the back of the falling public markets. If you think about how capital moves, we have these allocators who build portfolios, and they're like, you know what, maybe venture isn't looking very good right now. Now, that being said, anytime there's a constricted, funding landscape like this, you always find outlier industries. Yeah. And now you're seeing AI becoming that. There's a lot of funding going into AI. It's a step change in technology. We're beginning to see investors who have a more long-term view, pour capital in there. So I would say, broadly speaking, it's a very difficult time from a funding landscape on the equity side. On the debt side, our Open VC, we invest very early in tech operators' equity that are building their first technology startups. We want to go early. We're talking about what InterSwitch was many, many years ago when Mitch started. We want to back founders who are revolutionary, creating really incredible value-add solutions. So I would say that for us, the way we think about this is a perfect time to invest. Venture as an asset class is a 10-year, would I say you have to get into the market 10 years early. Yeah. The asset class actually, looks across 8 to 10 years out. So for us, we believe that right now is the perfect time to be coming into market, because we're going to see a lot of innovation come out of this market that will become more mainstream in the next 8 to 10 years. We're going to see market behavior. We're going to see value creation. I always say problems and opportunities are two sides to a coin. And now that it's a difficult time, it's the best time to be backing those who are creating value.
Yeah, thank you for that perspective. You know, you say there are two sides to every coin. So I want to talk about what it is that it's so attractive about African VCs. If you watch the top of my show, I talked about the fact that Scale AI had just raised $1 billion worth of funding. And, you know, Maria talked about AI. But I don't know too many African VCs on the startups now in the AI space. So which sectors are specifically attractive? What is it about this market or the Nigerian market that is still attracting capital despite the challenges?
I think, well, I mean, AI is there are AI startups on the continent. I think that's one thing to definitely make clear. Of course, they may not be raising $1 billion right now, sure, but they are there, and there are companies that are building incredible AI startups, and we have some of them at Accelerate, which we'll talk about a little later. But I think the Africa opportunity really boils down to a few things. The first thing is really a question of population and need, right? When you think about where does technology have the propensity to create the productivity gains that the world is looking for in this wide search for yield, the truth is Africa still remains the best place, right? Companies are finding it more and more difficult to manage energy costs, and there are opportunities to innovate in that space, whether or not you're a climate aficionado or not. Companies are looking for more productivity gains when it comes to food costs and spending for food and agricultural commodities, and there's an opportunity to innovate in that space. We're seeing a lot of great food tech companies actually shine during this time. Companies are still looking for financial innovation, maybe this time thinking a bit more about transactional credit. And, you know, there are great companies that are still providing asset-backed solutions for transactional credit on the continent. So we're still seeing a lot of opportunity. Now, of course, with the international space, they've got the luxury of long-term capital. I heard Maria talk about 10 years. We don't think that way at Future Africa. Yeah, we're more like 5 to 7 years, right? Yeah. And actually, in my opinion, my experience is that usually in Africa, we have 3-year cycles. But what's important, as Maria pointed out, is getting in on the ground floor of these companies. Today, you've got $1 billion of capital waiting for companies at Series A and up, right? From all these global funds like Partech, like TLCom, and so on and so forth. That money has to go somewhere in the next 3 to 5 years. It's only if you're investing now in the Andelas, Flutterwaves, moves of the next 3 to 5 years that you're going to have a shot at being able to get a chance at that dollar in a secondary transaction. So it's actually the perfect setup right now to start investing. But you have to do it with managers that know exactly what they're doing, that are on the ground, and they know what they're talking about.
Which brings me to my next point. I think even people who are not in the VC space, Maria, will not miss all the headlines about fintech failures, fintech shutting down, companies folding up, companies not able to raise follow-on capital, running out of cash, burning cash. So with the startup failure rate, it's really about what solutions you are bringing to the market that are helping investors stay confident. And I see between yourself and Iyinoluwa, you're developing new types of support models for founders and their startups. Can you tell us about how that is influencing the way people perceive the market in light of these failures that we've seen over the years, Maria?
No, that's a great question. I would say that at the very early stage, it is the nature of that asset class that it has a high failure rate. But it doesn't mean that it's not a great product for both founders and I guess capital allocators. Because just like you said, fund managers like us, we have put a lot of thought into how we build a strong portfolio construction that limits that risk and also support. So from an OpenSea perspective, we invest in one founder profile, operators who are launching their tech companies. And these are people who have experience doing this at tech startups, who have domain expertise, who have that execution ability that's very critical of the early stage. That, in a sense, de-risks the fact that there's execution risk so early. The other thing we do, aside from giving capital to these specific founder profiles, is also provide an operator network that supports them from start to launch. Now, 0 to 1 is the hardest part. I know that as an operator scaling multinational tech startups globally, it's that early stage that the risk is highest. And what do founders need aside from capital? Support. They need people who are going to put their hands in and help where it is reasonable for them to. On our operator network, we have software engineers, engineering managers from global tech companies, product managers, go-to-market specialists, domain experts. These are people who know what they're doing. And a 30-minute, 1-hour conversation with the founder really moves the needle beyond even just conversation. These operators actually get their hands dirty. If a founder, for example, wants to recruit a back-end engineer, you can tap into their networks. These operators can help you recruit, chatting to the last 3 candidates, for example. So I think it is these very specific things in addition to capital that really moves the needle. Ask every founder. The early stage, 0 to 1, is the hardest. Even as a fund manager, I'm a founder. I'm building a business. I'm building a fund. It is the hardest. You need the support from experts wherever you can kind of get it. And for us, we believe specifically that Africa does not exist in a silo. We're in a global economic landscape and conversation. And we're going to see different insights. We're going to see partnerships. We're going to see access to networks that our operator network provides, in as much as giving local context, because we have operators that span across expertise, geo exposure, and even stage. So that's how I would think from an open seed VC perspective.
And it's really interesting because I think these sort of new models of supporting operators and startups and founders is interesting. Now, Accelerate Africa is sort of pioneering a bit of that because you're not actually giving them grants or investments at the end. So tell us about what is so different about what you're trying to do.
So at the end of the day, the entire ecosystem runs on pipeline, i.e. there is a system by which great founders are selected, nurtured, bred to then be presented to people like Maria and myself when I'm on the VC side. For a very long time, we've had a lot of that happen through Y Combinator and Techstars. Right, so that was kind of the standard operating procedure. You went to Y Combinator Techstars. We actually were in a more personal capacity preparing the founders to go to Y Combinator and Techstars. And all of a sudden, one day we woke up and post 0 interest rate policy times when everything started to contract. A lot of these global accelerators basically said, no, we no longer want as many African startups to come to our accelerators anymore. And that meant that the pipeline of startups would be broken. Now, as ecosystem leaders, we thought we couldn't just fold our hands and wait for the train to go wreck. We had to do something to save it. And that was what initiated Accelerate Africa. So what we do is we pull together 10 startups from across the continent.
Every year?
Well, this is our first batch.
Okay.
And we have 6 of them from Nigeria, 4 of them, 1 from Egypt, 1 from Eswatini, and 2 from Kenya. And it's an equity-free program, so we don't offer investment. However, we pay for some of the costs associated with them being in the program, and we basically take them through 5 things. First of all, we help them think about storytelling, because storytelling is so important for building a great business, both for yourselves and for the investors that you hope to attract and partners. We help them build their teams, figure out gaps in their teams, fill holes in their teams, bring capacity to their team. We help them with business development, and specifically, our businesses, we want to put on a ramp to $1 million in revenue within a year.
Wow.
So it's really an accelerator.
Clearly.
And then the 4th thing we help them with is product development. So how do you think about, you now know the problems people are willing to pay for. How do you build products in a way that are low cost and scalable and efficient, right? So that you make an actual operating profit and you can grow profitably. And then finally, fundraising. So we bring all that firepower, our experience.
But are you guaranteeing them fundraising at the end of the course?
We are not. The whole idea of this is not to guarantee anybody anything.
But to make them as prepared as possible that it's likely to happen by itself.
They go to the market. So we have Demo Day on the 31st of May at Lagos Marriott. Our companies are going to be there with local angels, and that's our test.
Right.
That's the ultimate test of whether companies...
Have you then assigned a probability to how many of those 10 may ultimately get funding?
The honest truth is, as we speak, a lot of our companies are already receiving offers.
Okay.
In fact, I had a company get an offer of $100,000 the 7th week, the 6th week of the accelerator, and I had to be like, it might be wise for you to wait until the end, finished, and then that way we can already. So people are already coming up to us and saying, I would like to invest.
This brings me to a question, because out of the 5 things, and I'd like to hear Maria and yours thoughts on this, is what about the founders themselves? What are you looking for in the founders? Because you've talked about the way you support them, but are there specific types of characteristics? And maybe I'll start with Maria, in terms of what you look for in the founder.
Yeah, just zooming out, one of the common mistakes at the early stage is to back a founder who is very passionate about the problem but does not have domain expertise.
Okay.
This is, and the idea of domain expertise is unique insight. You can identify a problem, but is there a market? Is there a viable business in that problem? So one of the things we look out for with Open Seed is that domain expertise. Have you been exposed to this problem enough to have unique insights that reduces the time you need to iterate and validate a market solution? Because it's one thing to have an idea. It's a completely different thing to try to build a solution that customers are willing to pay for, not just pay for continuously to build a solid business model that scales using technology. Two completely different. So for us, we look for that domain expertise, that unique insight. I think also one thing I would add is that we look for people who are compelling communicators, who can tell their stories. Because at the early stage, you're not just fundraising from investors. You need to say the story to investors, but you need to get a team on board. No one builds anything notable alone. So you would have to build a team, a very strong team of people who are smarter than you, or people who know things you don't know. That is a skill.
Thank you.
For us, things that
so clearly, Iyinoluwa, passion is not enough, right? You need domain expertise as well. So can you tell us about, just in terms of the impact of the current environment? Because, we've been talking about interest rates, and we've been talking about the impact on small business and borrowings. How do you see some of those macroeconomic factors playing? And then very briefly, also comment on African LPs and investors coming into funds and actually risking their capital.
Yeah, absolutely. I think this is the best time in venture for local firms and for local investors. In particular, I think there was a lot of haze with the international investors, like tourist capital, coming from other capitals and it created like a bubble effect. And now you have the clarity of mind to actually look at innovation for what it is, to value profitable growth for what it is, and to be able to make very rational decisions about what the innovations are worth and what the companies are worth. And I think because of that, there's a particular kind of founder that thrives in this environment. And we know that founder because we've been that founder. Right. I founded Flutterwave in 2014 in the middle of Ebola. People think that we just became...
They probably thought you were crazy.
Everybody thought I was crazy. Flutterwave, which everybody celebrates today, we founded in 2016 in the middle of the currency crisis, just right after Buhari got into power. So we know crisis well, and that's when we thrive, because people have problems, real problems they're willing to pay for, real problems they're willing to solve. Move, we founded in the middle of COVID. So it's really, this is a particular time for a particular kind of founder and a particular kind of investor. The guys who fly in from London are not they're not going to help you much. The guys, the investors who fly in from Silicon Valley, they're not going to help you much. The guys who are going to help you are the guys who are here, who understand the dynamics. And to the point about African LPs have the best chance right now. Because for me, when I look at LPs, I can raise capital from anywhere. We're raising...
For the benefit of our audience, that's limited partners. Investors in the funds.
Investors in the funds, right? I've raised 45 billion naira from all over, right? So it's not a problem to raise money. The question is, can you return the capital?
Absolutely.
And how do I return the capital? I need limited partners that have large companies that can put my companies on a run rate to $1 million in revenue as quickly as possible. That means I have to be talking to insurance companies. That means I have to be talking to reinsurance companies. That means I have to be talking to banks. That means I have to be talking to, large local corporates that have real problems, that my companies can solve. So this is the best time for African LPs to get in.
Definitely. I'm a big believer in African LPs because with the foreign investors, sometimes when the going gets tough, the briefcase goes out the door.
The briefcase goes, it's a briefcase
Absolutely.
investment.
But quickly on interest rates, and I want Maria to also comment on the macro environment and how it's impacting startups. And then broadly, what is your outlook really for the landscape going forward? And maybe I'll start with you, Inyi, and I'll end with Maria.
Well, I think we're moving. I don't think high interest rates are as much of a problem in tech, to be very honest. Not because of the cost of capital, but because oftentimes the money is transactional.
Okay.
So people have 20% or 27%, maybe 30% interest rates. But really, to many companies, like a payroll lending business is 8% per month, right?
Right.
And you're lending over 2 weeks. So my point is, it's manageable actually, right? High interest rates are cost of doing business. The key is, are you innovating for a real problem?
Right.
Right? And if you're innovating for a real problem, you'll find that it's actually possible to manage those interest rate costs, to create the returns if you're looking at the problem correctly and looking at it properly. I actually think a lot of people who I call it bulk disburse loans are going to miss out, because you can't give people money for a year and expect nothing to happen.
Exactly.
Right?
So the volatile environment.
So the volatile environment definitely makes it difficult for you to do these longer term things. But if you're offering a line to a startup and they're accessing that line on a week in, week out basis, you're actually more likely to make even more money from that startup.
Yeah. And what are you most excited about, very briefly, about the future of African VC?
I think it's going to be profitable. I think many people think of VC as profitable, but people don't think about it as a loan. VCs essentially it's a fee business that takes a credit card against your future returns.
Absolutely.
Right? I think now all the people who want to play that credit card game and just rack up debt are gone because the business model doesn't support it anymore. And now you're going to have people who actually care about profits.
and solving problems.
And solving real problems.
Absolutely.
Profitable growth.
Absolutely.
And that's what I'm really excited about.
Thank you. Maria, final words to you. The future of VCs, your thoughts on the macro environment and its impact on startups, very quickly.
Yeah, I would say that this is a call to the capital allocators, actually. This is a perfect time to be in venture. I really, really think that we are at a time where the private markets can begin to back true value at scale to actually impact the local economies. Every capital allocator, the pension funds, the banks, the family offices, even the corporate VCs should be thinking about allocating into venture ahead of the next wave. We're going to have step changes in consumer technology. We're going to have platform changes that actually impact the real world through investors like Inyi and I, who know the market, who have global context into what good looks like as a placing Africa on the map in capital allocation. So that would be my last thoughts. This is a great time.
Fantastic. A great time for VCs. Now, if you're thinking about it as a local investor, please don't hesitate. Talk to Open Seed VC, or Accelerate Africa, Future Africa. Iyinoluwa, Aboyeji, and Maria Rotilu. Great to have had you both on the show with us talking about the VC landscape. I wish you both the very best.